Our next panel is a very important panel. It's the, I guess it's the, it's the money panel. The guys that are raising money and looking for money and can tell us where to find the money in this very desperate situation for seed capital and venture capital. And I'm absolutely delighted to allow Ray King to be the chair and moderator of this particular panel. Again, I didn't know Ray. Ray is the head of development for the Toronto Stock Exchange, and some time ago they did a very visionary agreement with the Tel Aviv Stock Exchange to bring IPOs from Israel to Toronto, and it's a upward battle, but he's hard at work. And when I called him, having not met him, told him what we had in mind, he immediately agreed to participate, became a sponsor, has been very, very helpful, and I can add him to the list of the number of godfathers that have helped this day be possible, and I'm delighted to turn over the podium to Ray King of the Toronto Stock Exchange. Ray?
Thanks, everyone. We're just going to get everybody up on the stage. We're just looking for an extra microphone, actually, so bear with us for a moment here. So as Senator Grafstein was saying, I'm with the Toronto Stock Exchange, which I know for most of you in the room, you're thinking, why in the world is the exchange involved here? One of the main reasons is that one of the many things I do at the exchange is run a number of our strategic global development initiatives. And one that I've been working on for the last 4 years now is building a tighter relationship with the Israeli market. I think Senator Grafstein alluded to the fact that we did sign an MOU with the Tel Aviv Stock Exchange a little bit earlier this year, ultimately designed to bring more Israeli companies to this marketplace, but also take some more Canadian companies over to that marketplace as well. This panel is going to be touching on some elements of what we're all trying to accomplish with that, which is basically finding the capital. And I realize that in the context of some of the comments we've heard earlier today, finding the capital in today's marketplace is like a wild goose chase, I suspect, for a lot of companies. What I'm going to do is, instead of reading off bios, I'm going to ask each of our panelists to just give a short introduction to themselves and to their respective firms, and then from that we'll launch into a series of questions. Morry?
Well, thank you. I'm here, I think, as Jerry has alluded once or twice, that he's got a number of relatives here. And so I think he's just done this. I mean, I have an extra relative. Lauren is sitting there. I think he's just done this sort of as a family gathering or something like that. So I'm very pleased to be here and see a lot of old friends and see a lot of people that I know, both on the Toronto side and on the Israel side, and see actually some people from my daughter's law firm, which is somewhere around here. And what I've done in my life is I'm one of those people who worked for the same company for 35 years. That was GE. I had a great career in GE. I ended up being the managing director of GE Medical Systems in Israel. I had the privilege of both developing CT, the CT scanner, being the guy that started that at GE and started the MRI business at GE. Actually started a business which you heard a little bit about from one of the earlier panels, which was focused ultrasound. Started that as well. So I've had a very lucky career. And the most lucky part was to end up in Israel and staying in Israel after I retired from GE, mainly because I was just absolutely floored by the amount of innovation that I saw there. For example, I remember coming to Israel and I'd been an expert in MRI, and somebody told me, you know, there's a company here that's putting an MRI in the carotid artery. I said, you mean just the coil for the MRI? He said, no, it's a whole MRI in the carotid artery. I said, boy, I better find out about this company. It's a company called Topspin, and they were, in fact, putting an MRI, making it really miniature and putting it in there. And I said to them, I don't understand why you guys are doing this. I mean, why don't you build something as big as this, and instead of having it, and then let the surgeon use it to do tissue characterization when he's doing surgery. And he said, well, that's too easy. And that was part of the I think the kinds of questions that we've had here about what is it in Israel that drives Israel, I think that was one of the key lessons to me. Unfortunately, they went after something that was very difficult. It was difficult in the sense that even if you could find the plaque, the vulnerable plaque, there was nothing you could do about it. And they would have been far better off building something that was as big as this and using. But there are other companies that are now doing that.
Great. Why don't I let Mark?
Great. Thanks, Ray. So I'm Mark Usher. I'm a partner with Wellington Financial. My company, my firm, has raised $150 million from institutional investors in Canada, and we do growth capital financing for mostly technology companies that want to delay the dilution of equity. So the panel, we're going to talk today about startup capital and venture capital and risk capital. Our fund, our business, comes along a bit later when there is a product, when there is customers, and the company needs more money to grow, whether it's to expand abroad, develop a new product suite, hire more people, what have you. So we're sort of, I'd say, a mid to late stage fund. As I said, we've raised money from institutional investors, many of which you know here in Canada. We do business across North America. And the interesting part of the story we'll talk about a bit later is, so 6 of our last 8 financings have been in the U.S. market, and I'll talk a bit about that later while we're doing that. But Canada's our home market. We've done financings across the country from coast to coast. We're on our 3rd fund. And a bit about me, so I spent 15 years at Royal Bank. I'm a foreign banker. I got my blue suit on today. Shout out to all the bankers out there. So my last job was working with technology companies, lending money to them, providing financial services to them. So that was a great sort of learning ground for me to come here at Wellington and do the thing. And we're doing at Wellington, and I've got a lot of experience working with early stage technology companies really for the last 13, 14 years. And it's a market and a business that I love, and it's very exciting to work with. And there's a lot of fantastic people, a lot of great ideas and problems being solved, and every day it's like bits and bytes. Really, you don't know what you're going to get. Whether you're going to get sort of a couple of cashews and a shreddy and a pretzel, or you're going to get 2 pretzels and a shreddy. So every day is different. It's very exciting. It's very volatile, but again, we'll talk a bit about that later.
Sure.
My name is Nimrod Elmish. I come from Israel, and I wear 2 hats in Israel. One of them, I'm a partner in a company that manages the financial of about 200 startups. We provide outsourced CFO services for those companies, and we escort them basically from their initial stages through the funding stages and up until the exit strategy that they choose to go. And since we opened an angel club about a few years ago, and we start helping them raising funds in the initial phases, we decided that's the best way to help those companies, because, and I will talk about it a little bit later, about the funding problems of the early stage startups, maybe give you a little bit of background why we have so many startups in Israel. There are about 5,000 startups in every given moment. And we try to form now a new vehicle that basically will define the VC model, the traditional VC model, and will try to build new vehicles in Israel that works according to the model of what we call the super angel models. I myself invested in 5 companies. We help financing about 50 companies in Israel. And the problem was always that when you hold a small fraction of a company, it's very difficult to monitor the company and to have the ability to get the right decision at the right point. And we come here because of the gap that we see today in Israel in VC sector that basically built the whole startup nation. We couldn't do that without the hundreds of millions of dollars that was poured into the industry. But the problem is that the same model that built us up is the same model that now is taking us down, because when you work with VCs that basically needs 1, 2, 3 companies that will reach billion dollar evaluation, then the problem is that you have another 45, 50 companies that stays underneath the radar and will never reach the next phase, will never reach the next round, And in these companies sits many of my friends, angels investors, friends, family founders, the first stages. And this is something that if it goes like this, if it continues like this, probably we will have a problem in a few years. We're trying to come here because we see the opportunity, and we see that there's no funding for VCs in Israel from the US market, which was the major market that poured this money into the high-tech sector. And we're trying to find out if we have partners here in order to take step and to move forward and try to bring those technologies here.
Thanks, John.
Hi, John Varghese. I'm a relative of the senator.
Many relatives here.
Thank you. Thanks for inviting me.
So does that mean we're also related, Dad?
Absolutely, Uncle.
It's a very Israeli.
Mother from another mother.
It's one degree of separation.
I'm a partner at a venture fund called VentureLink here in Toronto. We're about $220 million under management. Our source of money is retail. We're called from the labor-sponsored investment fund. So it's, some of you know, there's two ways to get capital here in Canada. One's institutional and the other's through the retail channel. So we've been very successful in terms of getting the capital. We today have about 34 companies in the portfolio, combination clean tech, and some mezzanine debt investments in there. We still have funds, so we're investing. We've done new deals this year, and we'll continue to do so as we manage our capital pool out. On the institutional side, I'm in the front stages of trying to launch a Canada-Russia nanotechnology fund. So I'm about to embark on the search for capital that all of us are going through from the other side of the fence. On a sort of a broader scale, I sit on the executive committee of the CBCA and on the board, so we kind of understand the flow of capital issues and challenges and some of the international opportunities and challenges that we're all facing.
Great. Thanks, gentlemen. I want to actually start building off of a point. Mark, you talked about volatility, and Nimrod, you sort of alluded to the situation that's emerging in Israel now, which is kind of counterintuitive, but several people have been saying a little bit earlier with respect to the startup nation. Mm-hmm. And Morry, I know you and I have spoken about this on the phone. I think both Canada and Israel are in somewhat of a unique position, if you look at it from a broad economic perspective, in that both countries weathered the past few years from an economic perspective relatively well in comparison to the U.S. and certainly the European Union. Strong banking industries. Neither one of us had banking collapses or bank bailouts. Both of us came out of the recessionary curve quite a bit sooner than did the U.S., and yet both countries now are caught in a situation where, despite the strength of our economies and our banking system, we're all struggling to raise funds. And Mark, as you said, the volatility associated with that in terms of supporting that next round generation, if you will, of startup companies. I was wondering if you wouldn't mind sort of fleshing out the whole idea of the end of Startup Nation, then our Canadian panelists as well sort of jumping in with their perspective as well.
Yeah, first of all, I would like to give you a little bit of background of how does it form? Why do we have so many startups in Israel, and how exactly do 3-4 entrepreneurs team up with various knowledge, with different perspective, with accumulated knowledge? And I'm meeting about 6-7 startups every week today because all of them needs funding, and they understand that without it they have no chance to move to the next phase. And when I look at how they build up, so usually we have one guy coming from the intelligence units of the army, which brings a lot of knowledge for young people for 4 or 5 years, very extensive, and brings out expert with something which is equal for 10 years of experience. And then we have another person, another young guy coming from the big companies, Elbit, Elsint, all the technological old companies which became huge. And then there's always a Russian guy. Usually it's the smartest guy, by the way.